Let's have a look at the foreign exchange markets this hour. Risk trades seem to be back on the agenda today, and that means getting back into some of the currencies that have been out of favour. The euro continues to gain a little bit of ground over the last few days. The euro dollar up by 0.4%. The euro stronger against the yen as well. But even the risk trade can't do much about sterling today, and we're pretty flat there, 151.36. Euro dollar then 136.80 is what I said, and this is the pattern that we've seen over the last few days or so. The last week, the announcement we got out of Greece and the Greek delegation's visits to Berlin and to Paris seeming to comfort the markets, at least in the short term, about the liability of Greece for its own debts, and that means that we've put a little bit of a temporary floor, at least underneath euro dollar. Dollar yen then 90.40. We had some disappointing lending data out of the Japanese economy, and that's getting some people a little worked up about what's going to happen to monetary policy over in Japan. And of course we can't forget the comments that have come out of the Chinese over the weekend about the possibility of removing the dollar peg. Let's get an update on the markets now, in the foreign exchange markets. Mario Singh joins us from FX1 Academy. Mario, thanks for coming to talk to us. I have to start with talking about the yuan because that seems to be where a lot of the market's attention is focused. How seriously are you taking these comments about the possibility of removal of the yuan peg?
Hi, Anna, that's a great question. At this point, I still feel that the Chinese are very cautious about how the yuan is going to move. So while the peg has been on ever since, I think it was mid-2008, it's about, say, 6.82 now, they're really got to sort out their own domestic problems at this point. I don't feel that the peg is going to remove, or at least I don't feel they're going to appreciate their currency anything significantly, nothing more than 2 or 3% over the next 12 months, until and unless they have higher GDP growth, they have higher unemployment, higher employment figures, because they are really interested in their own domestic agendas at this point of time, at least.
Mario, will you be buying euro dollar right now? Do you feel comforted enough by what you've heard from European leaders to get into that particular trade?
Well, the euro has been showing some bounce, at least ever since Friday, and a continuation until now. The long-term trend for me is still downwards. It could move up all the way to, say, 137.50, 138.50, but for me, that is still a place for me to go short the euro. I don't feel at this point that the whole downtrend has been negated. I still feel that it will be selling opportunities until the euro breaks 140. What has been good, though, was that the French President, Nicolas Sarkozy, has come out in full force saying things like, we support, we are really rallying around Greece. That is probably the strongest statement from any member in the EU at this point of time. So that has been shown to have a little strength in the euro dollar, at least for today.
Some more interesting comments coming out of China today. It's from a top banker of Export-Import Bank of China, saying that that talk of China giving up on the dollar is absolutely nonsense. Ultimately, especially after the kind of risk appetite that is back on after the jobs report, is this going to give more weight to the U.S. dollar?
It will give a little bit more weight to the US dollar, at least for the next couple of months. But at this point, when the whole world really is looking at China, what was great when we are seeing in the last couple of days of all the risk continuation coming in, China is really having at this point, having a little, may I say, a little pullback, a little cautious pullback, because they're very, very deeply concerned in their own domestic economy. So they're not really interested in how international relations are going to play out, at least for the short term.
Right. And another thing that I'm curious about is, of course, China is not going to go the way of Japan, like that Plaza Accord, opting for that big, huge appreciation. But if you are looking at a modest appreciation, 3 to 5% or so, are the bets that we're seeing at NDFs, are they accurately gauging what is actually happening in the Chinese leadership's minds?
Well, at this point, really what the markets are pricing in, traders are pricing in, I would say, the expectations. So they don't really know like how it's going to move out. But people are pricing in the expectation that the peg will be removed at least until the second quarter of 2010. So that's how we see the markets reacting at this point of time.
Mario, where do you see sterling going from here? It's come under pressure with regards to the election, which many people expect to take place on May the 6th, although we haven't heard that officially. Where do you see it heading now?
That's a great question. I did want to talk about the sterling today. I'm seeing sudden strength in the morning. I think it popped up all the way to about 151.75 and it's starting to come down. While there is certain strength in the sterling at this point, we did see a scale of how we actually dropped below 150. It went to about 148.50 in the last 1 to 2 weeks. So while I see the pound heading up, I don't foresee that to be a sustainable rally. I'm still for the idea that the pound will be moving downwards. With the election coming up, there really is a little bit of civil unrest. If we're looking at it today or tomorrow, there's news coming out that it's going to be a strike involving about 300,000 people that's going to be striking all over London. So with this civil unrest, I am for the idea that the pound will continue to go downwards. I don't see the rally upwards to be sustainable above 152.
Just briefly though, Mario, I suppose there's a risk in that strategy that if we get a convincing opposition win on May the 6th, that could mean further cuts to the deficit and the pound goes higher, I guess.
I would agree with that. People in the UK, they aren't really too pleased with the way Gordon Brown is running some of the things. Their budget deficits are sky high. So unless and until we do see a change in management or a change in government, then possibly I would still see the pound heading lower.
Right, exciting day for you. Good luck with FX trades. Mario Singh, co-founder and CEO of FX1 Accounting.